So we're live now? Yes, I hear it. Okay. All right, great. Well, the October 15th, 2021 Revenue Estimating Conference will come to order. I'm Craig Paulson, the Chair and the Director of the Department of Revenue, Department of Management. And the first thing we'll do is approve the agenda, which has been distributed. So unless there is an objection from one of the members, we'll approve those by unanimous consent. Okay. No objection, those are approved. We'll approve the minutes next of the March 2021 meeting. Again, unless there is an objection, we'll approve by unanimous consent. So those are no objections, so those are approved. Next thing, it's my understanding that it's standard practice to kind of get some thoughts from each one of the members. I believe the protocol is to start with Civil Services Agency.
Thank you. There we go. Good morning. Let me open by stating that as of 2 weeks ago, the fiscal year 2021 books are closed and revenue came in much higher than the March REC estimate. Like most states, we missed it big, but of course it's better to be on the high side than the low side. In both dollar and percentage terms, fiscal year 21 growth exceeded any year since at least fiscal year 2001. After fiscal year 20's low rate of growth, which was a direct result of COVID-19 economic and social ramifications, fiscal year 21 provided a very strong rebound that was concentrated in the final 3 months of the fiscal year. General fund net revenue for the year increased $870 million and 11% compared to the fiscal year 20 level and exceeded the REC estimate by $737.1 million or 9%. Iowa's large revenue growth experience was similar to many states late last spring. The Urban Institute and the National Association of Budget Officers both indicate that despite the global health crisis and pandemic-induced recession, most states saw double-digit growth in revenues, and most of that growth was in the third and fourth quarters of the fiscal year. This growth reflected positive consumer confidence in the form of pent-up demand for goods and services, an improving economy, and massive federal assistance in the form of stimulus payments, child tax credits, extended unemployment benefits, and the Paycheck Protection Program. In Iowa, according to the Federal Funds Information for the States, also known as FFIS, just 2 of the federal stimulus programs, the federally funded extra unemployment and the economic impact programs, pumped nearly $11 billion into the Iowa economy since the start of the recession in 2020. This likely provided a huge boost to personal income and sales tax revenue. The question is, what happens as the impact of that stimulus money fades? Wage and salary income looks fine now, despite the reduction in employment, but come late spring and summer next year, Iowans as a whole may not have as much money to spend as they did the previous year. We continue to be in strange times with an unbelievable level of uncertainty. The COVID Delta variant continues to disrupt the U.S. economy. Rapid spread of the Delta strain of the virus in recent months has slowed third quarter calendar year growth in consumer spending on services and is expected to continue to inhibit growth through the end of the calendar year. Economic forecasters now expect the U.S. economy to expand at a slightly slower pace as measured by GDP compared to last spring's estimates. It's still very uncertain how much of the shifts in consumer, business, and worker behavior will persist, and whether short-term disruptions, such as future case surges caused by the variant strains, will have a long-lasting ripple effect. There are other headwind factors to consider as well, and these include more jobs and people, supply chain disruptions, and rising interest rates. On the positive side, according to the Bureau of Economic Analysis, Iowa's GDP expanded 7.7% in the second quarter of 2021, growing faster than most states, with the agriculture and hotel accommodation sectors accounting for most of the positive change in the quarter. Employment. U.S. and Iowa job numbers are still below pre-pandemic levels. At the recent pace of job additions, it will take the U.S. about 8 months to reach the former peak, but it could take Iowa longer than 2 years. A continuous challenge for Iowa employers has been finding qualified workers, and this has only been exacerbated by the pandemic. While Iowa unemployment reached a high of 11% in 2020, it's currently at 4.1%, much improved, but still a ways from the 2.9% before the pandemic. Like many other states, Iowa is not seeing a surge in hiring after the end of the federal extended unemployment benefits. On the positive side, while employment numbers are down, wage and salary totals for Iowa do not seem to have been impacted to nearly the same degree, possibly indicating that the jobs that are missing from the economy may be on the low pay scale. The dynamic of the U.S. workforce is shifting a bit, as well as we've recently heard about the Great Resignation, more jobs and employees, increased demand for higher wages, and more job flexibility. On a national level, supply chain disruptions are expected to continue to impede production, delivery, and investment, at least through the calendar year. The news is full of stories about all the ships stranded off the coast of California, as there aren't enough workers to unload the cargo or enough trucks or drivers to get the goods to consumers. Factories in Southeast Asia and China have been periodically shut down as the virus sickens workers, further disrupting supply. Interest rates. There is much economic talk about inflation, and recent market activities indicates that longer-term interest rates continue to rise. While this can be a sign of an overheating economy, sometimes it's a necessary sign of future long-term economic growth. It's too early to tell. The Federal Reserve continues to indicate that it will act to ensure borrowing costs do not climb too quickly. The pent-up demand for goods, the labor shortage, and supply chain issues also play into price increases and could fuel price inflation. Turning to more positive news, the increasing commodity prices are good for those who produce the commodities and bad for those who consume them. Iowa's increasing corn and bean prices are good for the Iowa ag economy. Iowa's budget reserves are full, and the last fiscal year ended with a large surplus as well. This gives Iowa better options for dealing with the pandemic and economic issues that remain compared to some other states. In summary, while there are some headwinds facing the global economy and to some extent the Iowa economy, Iowa remains in a strong financial position. Through last Monday, fiscal year 22 general fund revenue is up $80 million or 5%, but that 5% growth is concentrated in sales and use tax and corporate income tax. Individual income tax is down. Turning to the numbers before you, the LSA is cautiously optimistic in our fiscal year 22 and 23 estimates. While the first 3 months of revenue data shows good growth, we believe the rate is likely to slow as the fiscal year progresses and the enacted corporate and individual income tax reductions and the inheritance tax phase out begin to be realized during fiscal year 22 and 23. The LSA estimates reflect a 1.5% revenue growth rate for both fiscal year 22 and 23.
Thank you. The private sector representative.
Well, it's great to be back here with y'all, I tell you. Well, couple of comments there after Holly covered pretty much every topic. I guess inflation is one thing that we have to look forward to, at least from a revenue standpoint from the state of Iowa. Over the years, we always used to count on a certain level of increase in withholding and sales tax just because of inflation. And it's been years now since I've been able to say that what's probably going to happen again. This morning on the radio again, they reminded us that inflation numbers are about 5.2%. Well, that doesn't necessarily equate to a 5.2% increase in sales tax revenues, but it certainly does give us some cushion there that offsets increases and decreases in consumer spending. So it kind of helps level that out a little bit. But it also has the same kind of impact on wages. We'll let the John Deere and their employees figure out what's going to happen to wage increases. But that's certainly going to set kind of a standard once that gets settled. But we have seen wage inflation throughout this pandemic. And I think that's probably going to continue. So we will see growth. Last year, as the tax returns came in, we saw quite an increase, really much more than I thought we would have seen in reported wages by our employees throughout the state. So that's, I think, it's going to continue. We're not going to see that decline. And every employer I'm talking to is fortunately profitable enough to be able to give their employees increases. Never as much as an employee wanted. That hasn't changed over the years. But definitely is going to be some increases going out throughout the year. And it's very competitive. As I watch people change jobs, and particularly my grandchildren that are in that 20s age, I mean, they kind of set their own wages, it seems like, in working conditions more than anybody I've ever seen. Somebody coming right out of college and, oh, I'm just going to work from home, you know. And they get away with it. So times are really different. That new normal is, I'm glad I'm not running a staff of hundreds of people anymore. Interest rates. And it seems like the Fed is continuing to talk about letting interest rates increase. That's going to be good for Iowa because a lot of Iowans do have cash investments where they get interest. It's not much, but if that doubles, it's going to help quite a bit. And it's very easy, I guess, to say interest rates could double when they're from 0.01 to 0.02. It's not a lot of money, but it does help the revenue from the state for the state of Iowa. Recession. We haven't really talked about recession very much. We weren't sure what to call it when COVID happened, and a lot of people did call it a recession. But that was kind of an artificial one because of COVID. But now they're talking about a real recession, and when is it going to come? Of course, the economists always say there's going to be a recession. We just don't know when. But the only talk that I hear on a national basis about a U.S. recession, they talk about what's going to cause that, and that's either action or inaction in Washington, D.C. If they can't get the debt limits raised, it's going to cause a recession. I mean, that's all they talked about. Well, of course, it got taken care of here, at least for a while. So those are the kinds of things that there's no way we can predict what they're going to do or not do in D.C. Here in Iowa, farm economy, as Holly mentioned, is good. I mean, crops are coming in much better than expected. The farmers that I've talked to were surprised that they got the yields they did. Some of them have a little docking problem on their soybeans because they're way too dry. But everybody seems to be pretty happy this year. And employment numbers, it's not only Iowa, it's everywhere. I just got back from New Mexico. Boy, they're having really a hard time finding anybody to work. You don't know if a restaurant's going to be open this afternoon. It just depends upon whether they get enough people to show up or whether they're going to open their doors. So it made travel a little difficult. And same thing in the hotels. You may or may not get your room cleaned, you know, and they say, we're sorry, but hey. So, you know, everybody's struggling with it. I felt pretty good getting back to Iowa. Their COVID situation is so much worse than what we've got here. They're really scary about their situation. And it's their indigenous population that has not gotten the vaccinations, and that's really spread throughout the impact of that is really spread throughout their whole state. So it was good to get back home, I'll tell you. And here I was wanting to travel and get out of Iowa for a little while. Sure is wonderful to be back home.
Thank you. Well, first of all, thank you to the governor for the opportunity to represent the executive branch on the Revenue Estimating Conference. The work we do obviously is essential to ensuring the governor and the General Assembly have accurate revenue information to wisely and thoughtfully make decisions regarding necessary revenue and then the resulting budgetary decisions. To that end, I extend a thank you to the members of the conference for their thoughtful participation and to the people who help the members prepare for these deliberations, including the Legislative Services Agency, Department of Management, Department of Revenue. Conclusions regarding Iowa's economic future are challenging to arrive at. The data is often conflicting and noisy, and because of the unique pandemic-driven circumstances, it compounds the complexity of interpreting available information. That said, available information, looked at in its totality, appear to me to be point to a brighter and a very strong future for Iowa. Unquestionably, current revenues are strong. There's a strong base or foundation to build from, and the data would indicate continued growth into the future. Speaking of a few specific receipts, sales and use tax receipts are showing remarkable growth at 18%. Withholding receipts shows slim growth at roughly 1%, but we also need to remember that this is without the preceding year's contributions driven by unemployment compensation and with a reduction to the withholding table schedules. Of the various tax types, these two would be the more leading indicators. A few other noteworthy items from my perspective. Workforce participation rates are below pre-pandemic levels, and it's not clear how soon they will return to pre-pandemic levels, but clearly there is room for growth. In Iowa, there continues to be more job openings than there are persons seeking employment. Real GDP has now surpassed pre-pandemic levels in the state and nationally. Combined, these two indicate meaningful productivity gains that could and probably should be expected to continue into the future. And as the labor participation grows, that should only compound these positive effects. Supply chains are currently very stressed. Once again, there is only room to grow. And I'm inclined to believe that the creative supply chain operators will come up with solutions to get this critical piece of the economy moving as it should again, hopefully in early 2022, but that's a very hard thing to predict. Personal saving rates, while they've receded from the highs early in the pandemic, they are still slightly higher than pre-pandemic levels. This combined with the supply chain issues lead me to conclude that there's significant pent-up demand for consumer and business spending. Although not necessarily equal in all strata, wage growth is occurring and appears it will continue to grow into the foreseeable future. Inventories are unsustainably low, another precursor to growth. Iowa's ag sector shows strength and is contributing positively to the Iowa economy. 2021 began with near record commodity prices, and while they've decreased somewhat since the beginning of the year, they are nowhere near the lows we saw in 2019 or 2020, and exports remain strong. Additionally, Iowa will have a near record soybean and corn crop in 2021. Farmland prices are near record highs and remaining steady as demand remains strong. Fuel costs are a concern, and rising energy costs could be a drag on growth if not addressed in a meaningful manner. We need to watch inflation closely, and in fact, we are watching to see how long elevated inflation persists and how this affects spending behavior in the state. Given current economic conditions, it's hard to predict what inflation will do and its effect on state revenues. However, as some of the other previously mentioned matters normalize, inflationary pressures should decrease. I say again, from referring back to my opening comments, there is much conflicting information to review at the macro level, but I'm left to conclude that with a reasonable degree of confidence, we should expect continued growth in both Iowa's economy and the state revenues that it drives. So with that, we'll move to the next agenda item, excuse me, which is review fiscal year 2022 general fund estimates, accruals, refunds, school infrastructure transfer, and lottery and other transfers. As is past practice, spreadsheet's been prepared with the Legislative Services Agency recommendations and also the executive branch recommendations. My understanding is, although if I have the protocol wrong, correct me, but I believe we look to Mr. Underwood to see his thoughts on the recommendations.
Excuse me. Current fiscal year estimate is pretty close. We're $18.3 million is all difference. I would then take a look at the following year, just because I think that's probably the most important one. We're just $25 million difference on that one. unfortunately, they reversed a little bit the difference there, but whether, we can just pick one or the other. And we're not far enough apart there to spend a lot of time on it. So it's just a matter of preference as to which one you want to go with. We can either go with LSA for both years or the governor's appointment for both years. So there's no preference here for me. So I would be glad to move one or the other, and unless somebody has some specific reason that theirs is the best.
Would you think that then it would be for both 22 and 23, either the LSA numbers or the executive branch numbers?
Yes.
Comfortable with that? I'm comfortable with either.
I am as well.
So why don't we go with the legislative services agency numbers?
Legislative Services Agency numbers.
Second.
Okay, so we have a motion and a second. As I understand, we need to do the vote separate, but the first one would be to accept the legislative services agency recommendations for the fiscal year 2022 general fund estimates, accruals, refunds, school infrastructure transfer, and lottery and other transfers. So any further discussion? All right, then vote. Do we vote by voice or roll call? All those in favor say aye.
Aye.
Those opposed, no. The ayes appear to have it, the ayes do have it, and it is adopted unanimously. Moving to the next agenda item, would you like to make a motion again?
Yes, move LSA for fiscal year 23.
We have a first and a second. Any discussion? Seeing none, the motion is to adopt the Legislative Services Agency recommendations for fiscal year 2023 general fund estimates, accruals, refunds, school infrastructure transfer, and lottery and other transfers. All those in favor say aye.
Aye.
Those opposed, no. The ayes appear to have it, the ayes do have it, and the motion is adopted unanimously. The next item on the agenda is fiscal years 22 and 23 gambling revenues transferred to other funds and interest earned on revenue funds transferred to the RIF, or Rebuild Iowa Infrastructure Fund.
Well, this one's real easy. Since all the numbers are the same, I would move LSA numbers for those 4 items for both years.
I will second that.
We have a motion and a second. Any discussion? Hearing none, the motion is to adopt Legislative Services Agency numbers for fiscal years 22, 23, gambling revenues transferred to other funds and interest earned on revenue reserve funds transferred to the Rebuild Iowa Infrastructure Fund. All those in favor say aye.
Aye.
Those opposed, no. Ayes appear to have it, the ayes do have it, and the motion is adopted unanimously. Any other business to come before the conference? Seeing none, we are adjourned. Thank you.